Good to have you join us this morning. I'm Lee Ji-eun in Seoul. Coming up on today's edition of Business Daily. High expectations among Korean companies as they hope to tap back into Iran's consumer market, a new window of opportunity. We talked to an expert about where the Korean economy stands as of now amid lackluster economic recovery and its downgraded inflation forecast. The stock market rally here in Korea is putting smiles on a lot of faces. According to local conglomerate tracker Chaebol.com, there are now 24 individuals who hold more than 1 trillion won in stock assets, or $907 million. Among the beneficiaries of the recent Kospi rally is owner of cosmetics giant Amore Pacific's Heo Kyung-bae, whose company stock saw a near 54% gain since the start of the year. He's at number 2, only to be beaten by Samsung Electronics chairman Lee Gun-hee, with both holding more than $8.1 billion. New data from market researcher Display Search show that Korean companies are gaining strength in the overall world TV market, beating out competitors in Japan and China. Figures from 2014 showed that Korea was the only country of the three to record on-year growth. It improved in performance by taking on 37% of the market share in sales volume and 44% in value. Both Samsung and Apple have hit it big on the market with their new products, solidifying their positions in the field of smartphones and smartwatches, respectively. Samsung's new Galaxy S6 handsets will likely give the tech giant a much-needed boost, with sales hitting a record high after its worldwide release last Friday. For Apple's new smartwatch, market research firm Strategic Analytics predicts that it will sell about 15 million after its release late this month, giving the firm 55% of the market share. With the recent gains on Iran's nuclear program negotiations with the West, there's heightened hope in Korea with an open Iran that it will open a new window of business opportunities in the currently sanctioned country. But what's for certain is that Korea won't be without competitors. Our Eunice Kim has more.
With roughly 80 million people, Iran is among the Middle East's largest economies, third only to Saudi Arabia and the UAE. And as Tehran edges closer to a deal with the West on its nuclear program that would lift sanctions imposed, companies around the world are already gearing up to tap back into Iran's educated and hungry consumer market. For Korea, the top industries that stand to gain the most are construction, steel, and automobiles. Before the trade ban kicked in, Korean steelmakers had claim over about a quarter of Iran's market share, while Hyundai Kia Motors had sold some 20,000 cars annually. Korea's major construction firms that were busy building in the Persian nation in the early 2000s are also hoping to capitalize on new projects Tehran is expected to commission to the tune of up to $160 billion. But it's not all optimism. There are variables to consider too.
Due to the falling global oil prices, it's possible that Iran's actual buying power will not be as strong as it used to be. Also, with the influx of global companies, there's a risk of contracts being won over for lower prices.
While the rest of the world has stood back, China last year became Iran's top trading partner, raking in a cool $51.8 billion and setting itself ahead of the game. European countries will also look to dig in. But perhaps the biggest variable of all is whether the final comprehensive deal will push through at all. Even if it does, America's top diplomat John Kerry estimates it could be 4 to 12 months before Iran can prove its nuclear pullback, at which point sanctions will be lifted. Eunice Kim, Business Daily.
Meanwhile, Samsung Group has announced a set of new future tech projects it will be funding for the first half of this year, in line with its decade-long future tech development project. Here's our Lee Ju-young with more.
Where is the future headed? According to Samsung, much of it lies in the fields of medical and information technology convergence, and they have the figures to back it up. Since launching this project for future technology development in the second half of 2013, Samsung has selected 150 projects for investment. Over a 10-year period, it will pour $1.4 billion into research that it believes will lead the future. Out of the projects handpicked so far, 12% of them are in the fields of biohealth, medicine, and IT convergence, putting it in the lead among other projects of research. Samsung Electronics Vice Chairman Lee Jae-yong recently announced at Boao Forum for Asia, a high-level gathering of government officials and business elites in Asia, that Samsung sees the opportunity for innovation in the integrated fields of IT, medicine, and biohealth. For the first half of this year, though, it has selected a total of 29 projects, including 14 in basic science, 7 in material technology, and 8 in ICT. Eco-friendly alkene carbon compound research, new chemical material for energy storage, and new LED structure development are included in some of the projects Samsung will be funding. Lee Ji-young, Business Daily.
Now, some experts are voicing concerns about the Korean economy, citing fragile economic recovery momentum and the 0% inflation rate forecast. But how is our economy really doing right now? We'll talk to an expert about this in just a minute.
The Bank of Korea projected last week that the annual inflation rate is likely to come in at just 0.9% this year, down from the bank's previous forecast of 1.9% in January, on the back of falling global oil prices. The BOK governor said Korea's economic recovery has been slower than expected amid sluggish domestic demand and weaker exports. The central bank also cut its growth outlook for the Korean economy this year by 0.3 percentage points to 3.1%. All this creating greater concerns among experts over initial signs of deflation and a further slowdown in the Korean economy.
When we want to see how our economy is doing, we turn to specific numbers. And recently, some new figures are raising concerns about the Korean economy. To help us understand where it stands as of now and what remedies it might need, we're now joined by Professor Yang Jun-seok from the Catholic University of Korea in the studio. Thanks for joining us this morning.
Happy to be here.
All right, so to start us off, the Bank of Korea last week downgraded its growth forecast as well as inflation forecast, and some are concerned that this might mean that Korea is falling into a prolonged state of deflation. Then why are there so many jitters about the prospects of deflation? And maybe you could lay out some groundwork for us, our viewers.
Okay, well, I think people are scared about deflation because the revision was actually fairly large, 1.9 to 0.9%. But if you look behind the numbers, then if you look at the projection for the core inflation, which reduces very volatile food and fuel prices, then it didn't really change that much. It's still in the mid 2% range, which is on target. So I think the fears about deflation is somewhat overwarranted. In order for deflation to really have a negative effect on the economy, not only does the price index has to fall, which it isn't yet, but also people have to delay consumption because of it. And there doesn't seem to be any sign of that at the moment, or at least not due to deflation. Maybe due to other factors, but not deflation.
So you don't really believe that Korea is on the brink of deflation?
Well, I think we should keep an eye out for it because the trend has been slowing. But if you look at the core inflation figures as well as surveys of people's inflationary expectations, they're still in the mid 2% range, which is on target for BOK.
All right. Well, but then we did see some positive figures like, I guess, reflecting healthier side of our economy, such as the current account surplus for 36 straight months, right?
Okay, well, there's a bit of good news, bit of bad news. The export, if you look at the numbers within the current account, the exports fell and the imports fell. But exports fell partially because of the global recession, which is bad news, but also it fell partially because the price of oil had gone down and a lot of Korean petrochemical exports, prices have fallen down as well. But if you look at the numbers, the profitability of those petrochemical products seems to have increased, at least for a lot of companies. So there's a bit of mixed news there. But I think it's relatively healthy.
Okay. Well, Finance Minister Choi Kyung-won said this week that he believes that it's taking a bit more time for us to see positive effects of the current measures, and that actually the economic recovery is gaining momentum, looking at the boost in the real estate market as well as the stock market, and he expects that to spread into the real economy. Do you agree with him?
Well, I do agree with him to an extent. The policies always have some kind of a time lag. Monetary policy, for example, we think that it has 3 to 6 months time lag. Fiscal policy a bit longer. So there is definitely some signs of recovery there, but it's also true that the BOK has revised its projection downwards. So I think the economy needs an extra push, and I think BOK has suggested that the government take some fiscal measures on top of the monetary measures that BOK has already taken, and I would tend to agree with that.
Okay. Well, you talked about a needed extra push as well as some fiscal policies that the government has been trying to put in. But amid all this, what do you think is the most needed remedy for the Korean economy as of now?
Okay, well, the biggest problem with the Korean economy right now is that there's consumption has died down, especially since last year. And I think we need measures to boost consumption. And I think the best way to do that is temporary targeted welfare payments to the poorest portion of Korea. One of the problems is that people are saving their money instead of consuming it. That might be good for them privately, but for an economy as a whole, if there's no one to consume, there's no one to buy, so the businesses are reluctant to invest. And traditionally, we think that if more money is given to the very poorest, they cannot really afford to save, so they would tend to spend more of what they get from the government, and it tends to be a more effective way of distributing and facilitating the economy.
All right. Well, let's hope to see more of the positive effects on the fiscal policies as well as some remedies that you suggested for our economy. All right. Thanks for coming in today, Professor.
Thank you.
All right, that brings us to the end of today's broadcast of Business Daily, but we will be back with more fun and in-depth business stories tomorrow, so don't forget to tune in. Thanks for watching.